What about China? That was a bit of a disappointment. Clearly the boycott is impacting your business there. Can you give us a little color about what you're seeing and whether it's rebounded at all lately?
We are seeing a sequential improvement in China, and we're very confident and optimistic about the long-term aspects, and even this year that we'll have a great year in China. There is no doubt that the geopolitical tensions in the second quarter had a impact on the overall demand profile, but the overall Chinese market continues to be strong. And yesterday, the Chinese government went out and basically putting programs in place to have an increased focus on sports and sporting activity. So if you look upon the overall attractiveness of the Chinese market, that is unchanged, extremely high. Second quarter was due to political tension, lower demand than normal.
How do you deal with the backlash there? Do you engage with the government, with consumers? How have you responded to some of this pressure that you've gotten along with other Western brands?
Well, first of all, we are in the Chinese market for a long time and will be there in the long time. And I think that the best way you can do in such an environment is really show respect for local traditions and local stars and influencers, and not get overexcited about the short term. So it's about showing respect, understanding what's going on in the country, be relevant for the local Chinese consumer, and then have the patience in saying you're here for the long term. And we employ directly or indirectly, several 100,000 people in China. So we're big, we're a big employer in China, and we want to continue to be there, and we will be there because we still believe it's a huge opportunity.
What about online? Obviously a deceleration as it was super strong this time last year. What's the right balance when everything settles out of the store traffic and the business online?
There's no doubt that online will continue to be the growth driver, and we're aiming to run an online business in the next 4 years in the area of $8 to $9 billion. What you did see is last year this time, 70% of the stores were closed, so online was basically the only store that's open. So I think that you'll continue to see, the vast majority of the growth will come through either direct online activities, apps, or online connected partners, and that will normalize. In the second part of this year, you'll see a more normalized growth where you had an abnormal high and an abnormal low, in certain quarters. So online will continue to be the most attractive driver for growth also in the future.